With the rising repo rate and skyrocketing interest rates, how am I supposed to get the best home loan out there? Well, yes, it can be difficult for you to opt for a home loan with the rising interest rates, but that does not mean that this will come in between you and your dream house. Well, in this video, I'll be discussing how can you get the best home loan out there. But before you make this decision of getting a best home loan, have you selected what type of house you want to buy? A resale or a new property? Then check out our last video, resale versus new home. Which one should I buy? Hi, I'm Yoshu Pradhan. Welcome to our channel. Before we start the video, do consider subscribing to our channel and hit the bell icon for future updates. Now, without any further ado, let's get started. First factor that comes in is selecting the bank. One important and major decision that you have to make while going for home loans is that which bank are you taking the loan from. It is a very crucial decision that you have to make in the initial stages. People also have this preconceived notion that you should only take loans, especially when we talk about home loans, from big banks like ICICI, SBI or HDFC, whereas the truth is this is not a determining factor, but the factor that you should consider is which bank is providing you with the lowest interest rate. It doesn't matter then even if you take a loan from a small bank like Ratnakar Bank. Currently, big banks in India like HDFC are providing a home loan on the interest rate of 8.60% onwards, whereas a small bank like Karur Vysya Bank offers interest rate of around 7.15%. Now let's talk about EMI affordability. Equated monthly installments known as EMI you pay every month to the bank until the end of the loan period. Now how you can choose what would be the right amount of EMI for you? Well, it's said that your EMI shouldn't exceed 30 to 50% of your salary or income. For instance, if your salary is say 1 lakh per month, your EMI should be between 30 to 50k so that you don't feel burdened to pay the EMI every month with other expenses that you incur on a monthly basis. Therefore, it is considered safe to choose an EMI within 50% of your income. Moving on to the time period. Suppose you have taken a loan of 50 lakhs of 20 years tenure at 7% interest. Your monthly EMI will be around 38,765 rupees and you will be paying a total interest of 43 lakhs 3,058 rupees. Now assume that the rise in repo rates, your bank increased the interest rate to 8.5% from your existing interest that was of 7%. If you keep the tenure of the loan same, your monthly EMI will be increased to 43,391 rupees and total interest cost would be 54 lakhs 13,897 rupees. But if you wish to keep the amount of your monthly EMI the same as 38,765, then the 20-year tenure will be increased to 28.9 years, resulting in an increase of total interest cost to 84 lakhs 50,166 rupees. If you go for a less time period, that means you would have to pay less interest. The more the time period, the more the interest you would pay. Coming on to down payment. A down payment is an amount that you pay on your own initially to book your home. What does a down payment have to do with a home loan? Well, it definitely does. The more the amount you pay as a down payment, the lesser the interest and the loan amount. Let's take an example. Let's say you have bought a house of 1 crore and you pay 10 to 20%, that is 10 to 20 lakhs as a down payment. Now you're left with paying 80 to 90 lakhs with interest, whereas if you only pay 3 to 5 lakhs, you would have a bigger loan amount and more interest to pay. It would be best to put down 10 to 20% at the very least to avoid paying excessive interest and have a guaranteed manageable repayment schedule. Next, let's talk about home loan insurance. This is a type of insurance policy that offers your family financial security in the event of your untimely passing. Without this policy, if an event like this occurs, your family will be burdened to pay your remaining loan. So that this does not happen, you should always have home loan insurance. If something unfavorable happens, the insurance provider will pay back the loan balance on which the insurance was purchased. Here are a few more important strategies that you can also apply to save on interest cost and repay loans faster. Consider paying one additional EMI every year. If you have a 50 lakh loan of a 20-year tenure at 8.5% interest, an EMI of 43,391, if you'll pay one additional EMI every year, you can save up to 10.2 lakh rupees on interest costs, plus the time period of the loan will also get reduced approximately by 3.3 years. Next is consider increasing your EMIs by 5% every year. Taking the same example of a 50 lakh loan with the annual increment in your annual salary, consider hiking up your monthly EMI by at least 5% every year. What this will do is it will help you save up to 19.5 lakhs on interest cost and reduce your loan tenure approximately by 7.5 years. What you can also do is consider using your annual bonus or incentives to repay loans. Consider using your annual incentives or bonuses to make one lump sum additional payment towards the repayment of your loan. With 1 lakh additional annual repayment, you will save up to 18.5 lakhs on interest cost and your loan tenure will be reduced by approximately 6 years. In the end, I would say before applying for a home loan in India, you must carefully consider the requirements since each individual or bank has different one. As a result, you should choose a home loan based on your loan requirements, repayment ability and cash flow. Well, that is it for this video. If you found this video informational, do not forget to like, share and subscribe to our channel and hit the bell icon for further updates. Thanks for watching. See you next time.